If you have money in the bank, you need to hear this before 2026 hits. Welcome to Economic Deep Dive, where we break down the world's biggest financial events and hidden economic truths. In today's video, we explore a question most people are too afraid to ask. Why are your savings trapped, and why does the 2026 collapse look dangerously similar to the crash of 1929? Get ready for a clear, powerful, and engaging deep dive that reveals how global markets, money systems, and real-world events truly connect. Stay till the end to understand the full story, because what you discover today may change the way you think about money forever. Imagine waking up one morning and realizing that the money you worked for your entire life isn't really yours anymore. Not because you spent it, not because someone stole it, but because the financial system quietly locked it away from you through inflation, banking limits, declining currency value, and invisible economic traps that most people never notice until it's too late. This isn't a hypothetical scenario. It's already happening around you. And the last time the world saw this exact pattern, the year was 1929. To understand the danger of 2026, we must begin with one uncomfortable truth. Your savings are not stored safely in a vault. They exist as digital numbers that banks lend out, reinvest, and gamble with every single day. The majority of your money doesn't actually exist. It is borrowed, relent, and leveraged in ways you never agreed to. And while this system works during stable times, it becomes catastrophic when the economy begins to shake. This is the same problem that triggered the 1929 collapse. Back then, banks were aggressively lending, speculating in the stock market, and promising people that growth would never stop. Everyone believed their money was secure. Everyone believed prosperity was permanent. Then the crash hit, and the truth came out. Withdrawal limits, bank failures, frozen accounts, people standing in lines for hours to collect the savings they never received. The illusion shattered. Fast forward nearly a century later, and we are standing on the edge of a similar cliff. But this time, the crisis is unfolding more quietly, more slowly, and more strategically. Instead of a single dramatic crash, the modern system is squeezing people through inflation, shrinking real wages, rising debt, and financial policies that trap your money without you realizing it. Prices rise, savings lose value, currencies weaken, and suddenly, even though the number in your bank account stays the same, its purchasing power collapses. This is one of the most dangerous financial traps in history, the illusion of stability. The signs of the upcoming 2026 breakdown are all around us. Global debt has reached levels far higher than anything seen before 1929. Governments are borrowing to keep the system alive. Central banks are printing money to cover deficits. And ordinary people are left wondering why the cost of living keeps rising while their income stays the same. This is not failure, it is design. The system is built to protect itself first, not you. In 1929, the trigger was stock market speculation. In 2026, the trigger is far more complex. Inflation, interest rate shocks, global supply chain fragility, currency wars, technological disruption, and geopolitical instability. Each factor alone is dangerous, but combined they form a perfect storm, one capable of reshaping the global economy. Your savings are most vulnerable during these transitions. When inflation rises, you lose money without spending anything. Every month your purchasing power shrinks. What used to be affordable slowly moves out of reach. Banks keep your savings, but you lose the value behind them. This is the modern version of a bank run. Not people rushing to withdraw money, but people watching helplessly as the value of their money dissolves. Silent, slow, invisible. In the late 1920s, people didn't realize the danger until it was too late. Everywhere they looked, the system promised stability. Today, the same illusion is being repeated. Stock markets reach new highs even while economies weaken. Governments announce growth while households struggle. Banks advertise safety while tightening internal policies. The surface looks calm. Underneath, the pressure is rising. One of the most alarming parallels between 1929 and 2026 is the extreme concentration of wealth and power in the hands of a small financial elite. Before the Great Depression, a few corporations and banks controlled most of the money supply. Today, a handful of global banks, hedge funds, and technology giants dominate the world economy. When economic power becomes this centralized, the system becomes fragile. One mistake, one shock, one unexpected event can trigger a chain reaction. Another similarity is public confidence. In 1929, people believed the system was invincible. Today, despite massive problems, most people still trust the financial system without questioning it. They continue depositing money into banks, even though banks openly admit they only keep a fraction of deposits. They keep savings in cash, even though inflation destroys cash value. They invest in markets that are disconnected from real economic conditions. Overconfidence always precedes collapse. But there's also a new layer of danger in 2026, technological control. In the past, people could withdraw physical cash during a crisis. Today, most countries are moving toward cashless systems and digital currencies controlled by central banks. This gives authorities the ability to monitor, limit, or even freeze money instantly. During financial stress, governments can legally impose withdrawal limits, transfer restrictions, or emergency taxes, essentially trapping your money without calling it a bank failure. This is the modern version of the 1929 crisis, updated for the digital age. Another factor pushing us toward the 2026 collapse is global interdependence. In 1929, the crisis spread from the United States to Europe. Today, a shock anywhere. China, the US, the EU, the Middle East can hit the entire world instantly. Supply chains, currency markets, stock exchanges, and bond markets are connected like never before. A crisis no longer needs months to spread. It can spread in seconds. So why 2026? Analysts and economic historians point to several converging timelines: debt cycles, technology cycles, political cycles, and inflation cycles. Major financial resets tend to occur every 80-100 years. The last one happened in the late 1920s and early 1930s. We are approaching the same point. You are living inside a cycle that has repeated throughout history. And every time, the pattern looks the same: excess optimism, rising debt, expanding bubbles, and finally, an unavoidable correction. The biggest question remains: why are your savings trapped? Because the system needs your money to survive. Banks cannot afford mass withdrawals. Governments cannot afford people moving their savings to safer assets. Inflation works in favor of the system because it reduces government debt in real terms. When your money loses value, the system becomes easier to maintain. Your loss becomes the system's survival. This is why most people are encouraged to save instead of learning how money works. Saving feels safe, but in an inflationary environment, saving becomes the slowest way to lose money. Just like in the years leading to 1929, millions of people today are unknowingly feeding wealth into a failing system. But here's the difference. Unlike 1929, individuals now have more information, tools, and options. You are not powerless. You can understand the game before the collapse hits. You can learn how to protect your assets through diversification, real commodities, skill-based income, productive investments, and understanding how money flows. The purpose of this deep dive is not to create fear, but awareness. History is not repeating itself by accident. The patterns are clear, the warnings are visible, and the consequences will impact everyone, whether they are prepared or not. As we move closer to 2026, remember this: financial collapses don't destroy money, they transfer it. From the uninformed to the informed, from the average person to the elite, from the saver to the strategist. The people who survived 1929 weren't the ones who trusted the system. They were the ones who understood it. You now stand at a similar moment in history. The question is not whether a collapse is coming. The real question is, will you be prepared when it arrives? Or will you discover, like millions did in 1929, that your savings were never truly yours? This is Economic Deep Dive. Stay informed, stay aware, and stay prepared. Because the story of 2026 is only just beginning.